Welcome, Paul. Thank you for joining us. Yes. So I see your prayers were answered. Coordinated action that came
prayers
through,
never.
Driving markets up almost 6% in some cases.
Who would have thought?
Absolutely.
Now, the real big news today is that one of the Kardashians is having a baby. I think that's the reason the market's up.
Which Kardashian? One was
I think it's
had.
Khloe, or is it Courtney? It's definitely not Kim.
It's Courtney. It's Courtney. That's great news. We wish them all the best. But what's even more important to note is that central banks globally, Bank of Japan, Swiss National Bank, Bank of Canada.
Look, my
Fed,
goal in
ECB.
life is to say the thing that you least expect next. So my theory about this liquidity thing is that that's not the real reason that the market's moving up. Because, I mean, you and I have been discussing this every day for the last 18 months.
4.5% surely needs to be on the back of this coordinated action, Paul.
No,
what else has driven us higher?
There are other reasons. But this liquidity thing is really just about ensuring that banks don't face overnight problems. Because we know that the way the fractional reserve bank works is that you've got to have somewhere to go as your lender of last resort, blah, blah, blah. This is multi-currency, multi-bank, multi-company, multi-country, so that's all good. But the fact is, liquidity doesn't make your debts go away. It just means that you don't have any short-term problems.
But it's at a cheaper rate now because they've dropped it by 50 basis points.
Yeah, but in that doesn't even really count
Paul,
either.
If it's about the crisis, the crisis of sentiment and crisis of confidence, this is creating confidence, and thus
true, because you know that there aren't going to be any bumps in the night, and there aren't going to be any banks going insolvent because they've got the wrong stuff on their balance sheet. But I think the real reasons we're up today are more to do with the Chinese central bank indicating that they are happy that reserve requirements at their banks go down. The fact that there was this ADP number, which is the private sector jobs thing, because everybody knows that jobs in America is the one sentiment issue that it's got them in a big stick. And then, you know, other issues to do with the Purchasing Managers Index in Chicago number coming through positive.
That was almost 70 points.
So the point there is that people have been very gloomy about the US economy and the fact that it's a bit anemic. Not that it's more anemic than anyone else's, but, you know, this will confirm for them that the economy is recovering, albeit slowly. So you've got to look again at risk and growth assets because that's where you're going to get the returns, not being in, you know, safe havens like US Treasury bills. Blah, 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 so markets start to go up.
So what, so do you think the markets can maintain these gains
of course.
tomorrow? And then what if the non-farm payroll number actually disappoints on Friday?
Well,
which it normally does because
and there have been upward revisions.
Lately.
If you've seen the trend of that, I mean, I know one can get very het up about each last data point, but the trend in recent periods has been numbers being better and prior revisions being stronger as well. So, you know, I mean, Jim O'Neill from Goldman's was on the channel earlier today. You've got to spend more time listening to that guy because he says people look for the wrong reasons in the wrong places and then they constantly can't understand why things are moving along slowly and why people are making short-term decisions with regard to their equity holdings. You've got to be in the market, otherwise you miss out on a week like we've had now where we've been 5% up since Monday.
That said, there's also been a lot of opportunities to get into the market, Paul.
In recent weeks, what with things falling back and falling down?
And falling down. And that's the point, that this is the argument that there have been a lot of opportunities. And some say there are so many opportunities down the line, so don't
wait for the next collapse. No, there's not coming. The point here is that even though we were up, what, like 3.4% today on the Wall Street Index, we're only up
3.7.
You know, 1% or something, or 2% or something for the whole year. So it's not exactly been a market for people to kind of celebrate strong equity gains. But at the same time, for me, you know, you got to just keep coming back to this point. You can't be chicken. You can't stay out of equities because you think there's going to be a better time to get in, or B, some sort of disaster lies around the corner. You've got to be a little bit more emotionally secure than that. Optimism, yes.
Thank you so much, Mr. Paul Theron.